I'm Guy Allbrook with eXp Realty, and I'm here today with Andy Gagliano with Gagliano Mortgages. And Andy does an outstanding job of servicing his clients, servicing my clients, and he's an expert in the industry. So I'm excited to have him with me today and just talk about the services that he offers and maybe give us a market update. So, Andy, thank you for being here today.
Well, thank you for having me. I appreciate that. You did such a good job pronouncing my last name. I'm going to have to adopt you now.
Well, I practiced a lot before I got here this morning. But thanks again, buddy, for being here.
Yeah, well, I appreciate the opportunity to do this with you.
You know, one of the themes that we keep talking about that's so important is just giving people information and guiding them through the process. And you know, they don't do this every day, so they need to lean on somebody like you that really has the opportunity to give them good information and options that maybe they didn't realize that existed.
Right.
So if you could just touch on a little bit about Andy and your history, and then some services that you offer, and the information that they could get if they come to you, and what different scenarios that you work with.
Yeah, I'd be glad to. So yeah, I started Gagliano Mortgage at the ripe old age of 24. And I tell people that I was too young and dumb to know that I couldn't do it then. And I'll give my young self some credit. I'm not giving the old self any credit for being smart, but the young me was very smart. So the dumb part was not accurate, but the stubbornness or bullheadedness of being young was probably very key in me being able to start a mortgage company at the age of 24. But I started it. So this March will be 29 years since I started Gagliano Mortgage. And, you know, over those years, it's just been very rewarding for me to be able to help people achieve the dream of home ownership, to be able to help people who already own homes be able to refinance. Mm-hmm. And maybe they're pulling money out of the equity in their home to go buy a second home. Mm-hmm. Or to pay off some debt and make their financial picture look prettier. Mm-hmm. Whatever their reason is, you know, for me, it's very rewarding to be able to help people. That's a true passion of mine. Mm-hmm. And then I also love to solve problems. Mm-hmm. And there's countless ways to solve problems with mortgages. You know, whether it's the person who thinks that they can't qualify for a mortgage, or maybe they applied somewhere other than Gagliano Mortgage and their application was denied. Mm-hmm. You know, for me to be able to work with that person and say, hey, you know, the other company told you the truth. You don't qualify today, mm-hmm. but if you do A, B, and C, mm-hmm. then you can qualify in a month, mm-hmm. or 6 mm-hmm. months, or, mm-hmm. you know, however long it happens to be. So, you know, being able to just help people and help solve those problems mm-hmm. that they have is key for me. And, you know, I that's where I get my joy at night. When I lay down, I can lay my head down mm-hmm. and know that I've helped people mm-hmm. achieve something that's so important to them and their family's future and their financial future, like mm-hmm. home ownership. Because you and I know, being in the industry, that the vast majority of most people's wealth is in their home.
Yes.
And so we're helping to create wealthier people, and yes. that's a good thing to do.
Well, I think what you said was so important, and a lot of people, you know, they talk about home ownership, and for them, they think, I'll never be able to afford a home. But when they come to someone like you with so much knowledge and information you can share with them to help them, then all of a sudden they have all these options and possibility. And so if you could just touch on, you know, like we were talking the other day about some of the old mindset about how it takes, I'll never be able to put down a down payment for a home.
Yeah.
Well, touch on that, because I think a lot of people would be interested out there that are looking, maybe a first home buyer might say, well, I didn't even know that I could do that.
Oh, yeah. Yeah, I hear that a lot once we start digging into it, because, we're in the information age and there's a lot of information at our fingertips, but that doesn't necessarily mean that information is correct.
Mm-hmm.
So, it drives me crazy to no end every time I hear, excuse me, every time I hear some talking head on the news
Mm-hmm.
say that a home buyer has to put down 20% down payment, when that is not true. It couldn't be further from the truth. We do loans for people all the time who put no money down. So they're financing 100% of the sales price of that property. But most of the time, those are veterans or they're people buying USDA or rural properties and getting a USDA type of loan. But even for people who are not a veteran or not buying a property that's located in a rural area, there's opportunities out there for them to be able to buy a home with a low down payment, 3.5% down payment,
Mm-hmm.
but then they can get down payment assistance. And that down payment assistance can come in the form of a grant or even a second mortgage that would cover all of that 3 to 3.5% down payment. So still, they're not putting any money down.
Mm-hmm.
They're going to have to come up with some closing costs
Mm-hmm.
most of the time. However, you know as well as I do, if the market's right, they can ask the seller to pay their closing costs
Sure.
for them, so they truly can come to closing with no money down.
Mm-hmm.
And to sit down and have a conversation with a buyer and share that information with them and to see their expression on their face is amazing. And I think most people, when they think of a first-time home buyer, they think of someone that's young, starting out on their own. Maybe it's a young family, but we've done loans for first-time home buyers that are in their 50s or 60s,
Sure.
and they've just rented their entire lives.
Yeah.
And it's to be able to go to a closing with a first-time home buyer and just see their reaction at closing, like, I cannot believe this is really happening.
Yes.
That I'm actually buying a home.
Well, it's it's one of the largest investments in your lifetime.
Absolutely.
And it's also a dream that everybody, I believe, has, is having their own home. And when you offer those options, that their mindset changes from "there's no way I can ever do this" to "well, there are ways that I can do this," and then to actually see them be able to accomplish their goals and their dreams. There's no better feeling. That's great. And there's also another scenario that you and I have talked about, and that's that self-employed person that thinks, "Gosh, this is going to be so hard because I've been self-employed, and I don't know that it's ever going to happen, or but by the same token, there are also realistic options and programs out there. The way you look at a self-employed income and information that you could share that would help someone like that.
Yeah. So, with me being self-employed and having been self-employed for pretty much my entire adult life, self-employed borrowers hold a special place in my heart. And so I love to do loans for self-employed borrowers as well as first-time buyers. But for self-employed borrowers, what we do is we look at their tax returns just right off the bat. I want to see tax returns before I get more than 30 minutes into a conversation with them, because those tax returns are the key to the map of home ownership or to the map of being able to refinance and save some money on their mortgage. And once I get those tax returns from them, I can start picking them apart. And I say that like in a good way.
Yeah.
To be able to know, hey, here's some income we can add back to their income. Some of their deductions that they took, we can add back to their income. Or, hey, here's some income that we have to subtract from their qualifying income that we can't use, to be able to know up front how much income that they really have for qualifying purposes. And to be able to tell them at that point in time, okay, I've got your tax returns, I've looked at your income, I've analyzed it basically the same way an underwriter is going to look at it, and here are the problems that I see, or I don't see any problems, let's move forward. And so, it's important, and I think so many home buyers think, or so many self-employed buyers think that they're going to have to give their blood type, their firstborn, where their first address when they moved off to college, or whatever it might be. But that's not really the case. In fact, most of the time, I have to get less documentation for a self-employed borrower than I do someone who works for a company.
Very interesting.
And so the self-employed loans don't have to be difficult. It's that upfront analysis of those tax returns and having that good open conversation with that self-employed borrower to know we have a potential problem or we don't. And then if we do have a potential problem, I've got plan B. And plan B is, let's look at doing a bank statement loan for you to where we get 12 or 24 months worth of bank statements. And that's your deposits are what we use for your qualifying income instead of your tax returns. Because, a lot of business owners get great advice from their tax professionals. Coming into the year, if they've made a significant income, and in order to get out of this tax bracket and get into this tax bracket, their tax professional will advise them to maybe purchase vehicles and claim that as a tax deduction.
Right.
Well, that purchase can deduct from their income. That doesn't mean that they didn't make the money that they made. They just chose to take an expense that they would have incurred in the future and incurred it on December 31st.
Yeah.
So for us to be able to know that and then give them that other option of, well, let's not even use your tax returns. Let's use your bank statements and get you qualified for the mortgage. It can help a lot of self-employed borrowers or buyers get into homes.
Sure. So we've talked about the first home buyer. We've talked about the self-employed, but you also work with people that they have their home paid off, and now they're looking for a different situation, and they may be looking to downsize, or they may be able to looking to do buy a piece of property for whatever reason. But you can also help people in that situation too.
True.
Or this may be their second or third home. So I think the nice thing about all your wealth of knowledge and information is I bet there's always probably one that comes along but probably very rare that you say, I have not dealt with that before. I think you've probably seen 99.9% of everything out there that you could guide people with all your experience.
I have seen a lot. And I will say this. Even though I've seen a lot, I will never claim to know it all.
Yeah.
And so when that something does come across my desk that I've not seen before, I have a tremendous resource that I can go to, and those are my underwriters. That is the underwriting guidelines. And so, I can, and having been in the business for so long, I can even expand that out and say, well, my vendors are a good source as well, because, even though we don't get to choose who does appraisals today, because I've been in the business for so long, I've got friends who are appraisers. And if I have something that I've never seen on an appraisal, I can call them and say, hey, this is what I'm seeing on this appraisal. Is this something new?
Right.
Or, have I been misinformed about this in the past, or is this appraiser wrong and misinformed?
Yeah.
And so, just having those resources to fall back on is a tremendous help, because this as well as I do from being in the business. We can't close a real estate transaction by ourselves.
Absolutely.
We have to have a good team, and everybody on that team has to have the same goal in mind, and they have to be working together in order to accomplish that goal. And if one person on that team veers off course, it can create issues and problems for us. And so having that deep database of trusted professionals really does make a transaction go a lot smoother.
Sure. And the reason you have that is because of the relationships that you have, because of the trust that they have in you. And also that team is client centric. They're focused on that client.
Absolutely.
Everybody on that team has the same focus. We're here to help this client. They're the most important thing in this process. So I think that's why you have been so successful. And as we wrap up, if you could just touch a little bit about where the market is today.
Yeah.
And, not everybody does this every single day. So that might be good to hear just, your thoughts on the market, the housing market today. And I think would be very good to close out with.
Yeah. I'd be glad to do that. So, the Federal Reserve is making a lot of headlines right now. They came out after one of their meetings late last year in 2023. They came out and said, well, inflation's coming down. Because inflation's coming down, we think that we'll be able to lower our federal funds rate in 2024. So they said, maybe we can do 3 rate cuts. Well, there's a lot of people out there in the financial world that think that they know the Federal Reserve better than the Federal Reserve knows the Federal Reserve. And so we started hearing things like, oh, well, the Federal Reserve is going to lower rates 5 times. They're going to lower rates 7 times. Rates are today are this, and by the end of the year, they're going to be this.
Yeah.
Well, the Federal Reserve still today doesn't feel like they've got inflation where they want it to be. And our economy in the U.S. is still very strong, which is good. But because of that, there's still a little concern within the Federal Reserve about inflation, that it may come back to those levels that we saw. I don't anticipate we're going to see 8, 9, 10% inflation again. But if it gets to 4, 5%, the Federal Reserve is going to be very concerned, and they're going to take actions to correct that, which means they could possibly raise rates even more this year. So, I'm saying all that just to drive the point home that there's a lot of people who are talking out there right now, coming across as experts, but no one has accurately predicted the future every single day of their lives.
Right.
And to predict what this Federal Reserve may do is a shot in the dark. So with all of that being said, it may feel like I wasted a lot of breath with this next sentence that I'm going to throw out there. And that is that the Federal Reserve does not set mortgage rates. The markets, specifically the bond markets, will set or determine mortgage rates. And those mortgage rates change daily. And because of that, now those bond markets, they are watching and paying attention to the Federal Reserve. But primarily what they're looking at is inflation data. As that inflation data changes, as inflation goes down, mortgage rates will come down naturally, whether the Federal Reserve moves rates or not. As inflation goes up, mortgage rates are going to go up naturally. And so inflation is the enemy of bonds. If you think about it, without getting too deep in the woods, and I'll try to summarize this very quickly. If you bought a 30-year bond at, say, 5% interest, so you're earning 5% on that bond for 30 years, if inflation goes to 7%, are you making money on that? You're losing. You're losing money on that bond. But if inflation's at 2%, now you're making the difference between that 2% and the 5%. That's your gain. on that return. And so inflation is an enemy of mortgage rates. And if we do continue to see inflation come down like we have over the past 12 to 18 months, then we can see mortgage rates come down now. With, or I should say in the future. With all of that being said, one thing that I know is this. Today is still the best day to buy real estate if someone can buy. In fact, today's the best day to buy pretty much anything if someone can afford to buy it. And it's the right time for them to buy it, because in 5 years, things are not going to be cheaper than they are today. In 12 months, things are not going to be cheaper than where they are today. So, for those people, and I'm hearing a lot of them say it, oh, I'm thinking about getting into the housing market later this year when interest rates come down. Number one, we just talked about it. We don't know that rates are going to come down.
Right.
There's a chance they may do the opposite.
Right.
And number two, that house that that person may buy, say October, November of 2024, is going to be more expensive then. So let's just assume interest rates do drop between now and the time they buy a home. Well, there's still 8, 10, 12 months of home price appreciation that they've missed out on. And that appreciation is much more valuable than what they would have lost by paying interest on a higher interest rate mortgage.
Right.
And so, it's important to know that there's no limitation as to when someone can refinance. If they buy a home today and the interest rate's here, and tomorrow the interest rate's here, they can refinance it tomorrow at this lower rate. And so
that's a good point, because I don't think even I was aware of that. So there's no time frame.
That's right.
Yeah.
And there's no limitation as to the number of times they can refinance. I spoke with someone this week. They wanted to talk to me about refinancing. I put a proposal together, sent it to them. They were going to save $350 a month on their mortgage payment.
Wow.
You know what they said? Well, we want to save between $450 and $500 on our mortgage payment. So my response was, well, I want to save $1,000 on my mortgage payment, but I'm not going to wait to do it.
Right.
I'm going to take my $350 today, and if rates drop again later in the year, I'll refinance it again later in the year. That money, the cost of refinancing is cheap. When you look at $350 over 10 or 12 months, you're at $3,500 to $4,200 in savings, and we can do a refinance for that. So buy today and worry about the future in the future when it comes to your mortgage debt.
Well, that's a great way to wrap it up. And I'm sure you realize by now that Andy is an expert in the industry, and he shares so much insight and information, and he's got so many scenarios that he works with. And the most important thing is that he's looking to share the information based on your individual situation to help you. It's not one size fits all. And so I walk away every time I have a conversation with Andy being more educated, better informed, and I always learn something new about the market, mortgage, the industry. So, Andy, thank you so much for your time today.
Thank you,
it's been such a pleasure.
I appreciate the opportunity, and I'm sorry for going so long. I nerd out about this stuff. I love it.
I know, and that's why you're so good at it. So, again, thank you, and we hope everybody saw the value and got value out of this conversation, and wish you the best and have a great day.
Thank you, everybody.
Bye-bye.